talked about what an LLC is, and that it's the entity of choice, and you also mentioned the tax election of an S-Corp. So can you dive into what it actually is that S-Corp election, what does it do, and who does it work for?
Absolutely. So an S election is a tax election to be taxed as what's called a small business, so that's where the S comes from, and it's subchapter S of the Internal Revenue Code, a small business corporation. So that mattered when all you could be was a corporation. You couldn't be an LLC, so mom and pop would form a corporation and they get taxed really, really heavily, and it was killing small business, so they made the S election. Well, it fell out of favor when the LLC came along because you didn't have to be taxed as a corporation, but there's a trick you can do. As an S-Corp, you pass through your profits and losses the same way a sole proprietor or a partnership would, with one difference. An S corporation, if I have an LLC and it's just me, and I have an S corporation, I can be my only one employee in my S corporation, and I can pay myself a salary. Now that salary has to be what they call a reasonable salary for who I am and what I do. But every dollar of profit I make over that salary is considered a dividend, and I don't pay self-employment tax on it. So I save 15.3% on every dollar. So let's go through an example. If I'm a Schedule C filer and I make $100,000.
What does that mean, Schedule C filer?
Schedule C means I'm a sole proprietor. If you're a sole proprietor out there, you file Schedule C. You make $100,000 in profit on your business, leaving aside income tax. In self-employment taxes, so that's unemployment, federal Medicaid, Medicare, Social Security, old age, disability, all that stuff that comes out of your paycheck, you are going to pay $15,300. If you made an S election, you could pay yourself a salary, and let's assume that it's reasonable, of $50,000. Now you still made $100,000 in profit. You still got $100,000 in your bank account, but you paid a salary of $50,000. That means you saved employment taxes on the remaining $50,000 that was paid as a dividend. So that saved you $7,500 of employment taxes. And that's not a paper entry. I mean, your bank account would literally have $7,500 more than it did before.
But you have a dividend tax that but you're still paying the dividends,
So your dividend, yes, your dividend is taxed as ordinary income. So you don't get the special rate for dividends. You pay regular income tax at your effective tax rate, but you pay no employment taxes on it. And employment tax is kind of a hidden tax on the middle class. Most of us pay a lot of employment tax, not a lot of income tax.
Right.
But people never talk about it because it's hard to explain. Now, here's a caveat. There are restrictions on who can be an S corporation. You cannot have an owner that's a legal entity. So if you had a partnership, if you had a family holding company that had multiple members, it cannot own it. So here's another thing. If you want venture capital to come in, if you want angel investing to come in, they're going to come in with a legal entity. They can't come in because you're an S corp, so that's going to block it. You can only have 100 shareholders or less. And every shareholder must be a U.S. resident, alien, so a green card holder, or a U.S. citizen. So you can't have foreign investors. So what does that really mean? This works if your business is a mom and pop or a family business. You're not looking to take outside investors, and you're basically going to run it yourselves forever. And if you do, if that's what your business is, like let's say your family's business right now, it has 5 owners, no outside investment, and it could theoretically run forever with just those 5 owners in the family and the descendants, then you could make this election and save a ton of money in employment taxes. It works for you. But if your business is a high growth tech business, I would not recommend that. So the big trick is make sure you talk to your tax preparer and your tax lawyer about it first. And there's one other caveat. The trick with employment taxes only works if you can pay yourself a salary. So if you're a startup business and you're like, well, my business is kind of fickle, you know, I make a bunch of money one month and no money the next month, you have to declare within the first quarter of the year, so by the end of March, what your salary is, and you have to pay it even if you're losing money. So you need to be able to say, I can write myself a paycheck of $1,000 a month. If you're not at that point yet, don't make the S election. And here's a problem. A lot of CPAs will tell people to make an S election on day 1. It ends up costing you more money if you're not ready yet, because you still have to file employment taxes, and you have to pay for a payroll service, and you have to pay for state level unemployment. So that's money coming out of your bank account, but you're still paying the same amount of taxes as me as the sole proprietor Schedule C filer.
Yep.
So when you can tell me, Brian, I make absolutely enough money to pay myself $1,000 a month without going broke, then we can talk about it. So I tell people, here's a sweet spot. Between about $50,000 of income a year that you know you're going to be right around 40 to 60. If you're around $50,000 of income and up to about $200,000 of income, you're in the sweet spot. Because after you get to $200,000, you have to pay yourself such a high salary that you don't get the special benefit anymore, because there's a cap to the employment taxes of $112,000.
Right.
So between 50 and say 150 to 300-ish, talk to your tax preparer, talk to your tax planner, talk to your tax lawyer about making an S election. But I'll warn you this: if your CPA, if your bookkeeper, if your lawyer, anyone tells you on day one to make the S election, do not do that and fire them or find someone else, because making the election on day one costs you more money than you would otherwise have to pay, and it's not a benefit for you, it's a negative. And let me be the cynic right here. It's because this, an S corporation files 5 tax returns a year. A sole proprietor, like just me by myself, files 1. So if I'm a cynic as a CPA or an EA or a bookkeeper or somebody who's filing your taxes, how much money are they going to make if they file 5 returns versus 1?